Good morning, everybody. And I'm going live 2 or 3 minutes early, just getting everything set up. And just to set the stage, obviously, and I'll talk about it a little bit more when everybody arrives, assuming there'll be an everybody. Next week, we have the FOMC on Wednesday. We have Thursday, end of month options expiration. So that it's kind of more significant for the indices. And of course, we have JP Morgan Collar, the Mama Bear, like 9,000 ish contracts expiring, deep in the money calls. And we'll see where they roll to for October. And that'll probably have an impact. And I'll talk about that in my notes and stuff over the weekend or next week. And then, of course, we have Liberation Day. And let's skip to that. Oh, wait, I can't skip to that because I still have a minute before we officially start. So we have Liberation Day next week on Friday. On Friday, August 1st is Liberation Day. Yep, interesting short call strike at 6,400 today. Absolutely. I think it's like 17,000 customer long market maker short calls at 6,400, and we'll dig into that in a little bit. And any input you guys have from Gamma Edge on how that may play out, I'm all ears. Um, and I'll give you my take. And just FYI, those long calls have been there for a while, and as we'll see when we look, I'm sure you've seen it too, they're there next week as well. There was also an interesting discretionary trade. I'm sure it was a discretionary trade that went on Wednesday, I think, that we'll talk about. I meant to mention it yesterday, where a customer sold 6,300, 6,310 at the money at the time, call spreads, 10 wide, about 1,000 of them, and then bought 6360, 6405 debit spreads for next week. I copycatted it smaller and not as wide, and it's green on my side of the table. And I'll show you guys that. Anyway, that said, by now people have filtered in. It's 8:31, so I'll officially begin. So yesterday we kind of eked out a minor green day, up 0.1% at 63. We were kind of playing around that 75 inflection point all day. We kind of went to 85. It was a pretty much narrow day where volatility failed to realize again. And we'll talk about that a little bit. But the short version of that story is realized vol continues to underperform. Non-discretionary systematic funds are buying, adding allocation. CTA's trend following funds are buying. And so the macro bros inflation or valuation PE ratio is stretched. The PE ratio of the S&P 500 is 10 million times higher than normally it is. Whatever the sky is falling headlines are, and that all may be true, and those chickens may come home to roost. However, right now it's the flow show. However, non-discretionary buying, hedge funds, systematic, whatever it is what's ruling the tape. And I mentioned it. I'm not the only one. Many people mentioned it. At the end of June, Nomura, other people, Goldman Sachs, it was all over everywhere mentioned 130-ish billion or 115 billion at the time to buy. Tier 1 Alpha mentioned today 138 billion has come in buying. So that's mechanical buying. Has nothing to do with valuation, has nothing to do with inflation, just has to do with algos. And if you want to fight the algos, go ahead. That's not my job. Okay. So yesterday, what what might arguably say helped trigger the upside. Google had good earnings. Some of the or positive reaction. I don't care what the earnings were. The reaction was positive. Similarly, some of those GE, Verona, and some of those AI adjacent names had good earnings, and the market kind of responded. Um, So also, if we want to play the valuation game, whatever the earnings season game, so I found a stat: 25% of S&P companies reported, 67% beat on revenue, 88% beat on earnings per share. So if we want a narrative to make up to overlay on the fact that really it was systematic flows having nothing to do with valuation, we could always use that headline to justify what happened. Why not? Durable goods sales, I see them flashing in there, and that's the old price makes headlines. If we were down, we would find a different headline to explain why we were down. That's what I think. Um, Tariffs, the Japan deal was floating around, and the EU deal, and there's the macro bros that say that's kind of like going to be the template for upcoming deals. Of course, there can always be a rug pull, from the administration. That's kind of we'll see. Okay, so let me just get to some levels and lines, as I like to call them. So we closed at 63, 63-ish over here somewhere, wherever we closed, somewhere down here. And the straddle, depending, when I looked at it yesterday at the close was 63.40 at the bottom and 63.90, 95-ish at top. In the morning with the drift, now the straddle was 21, 22 points up on top. So from here, 20 points puts us at 95, right in range of that big potential magnet with market makers buying into the move. And the bottom of the straddle now, since we shifted up and the straddle prices come down, puts us at around 50-ish. And we'll talk about that. FYI, and I've been doing these weeklies selling client conduits above and below the expected move. And so here's the weekly expected move from last week. And, somehow we end up there again. Weekly expected move, weekly expected move. Here we overcut it by a little bit. Here we overcut it bigly. I forget what headline that was. But we see the expected move drift up the pattern. Oh, this is a volatility Bollinger Band logarithmic something or other secret sauce from Macmillan. And that's a warning sign that vol is too low. And we kind of tickled it here and we tickled it here. So it's just, there are these signs that things are just getting a little stretched here. Doesn't mean sell. It just means keep that on your radar screen. It's on mine, so I'm just letting you know. I'm just letting you know. I'm not running for the exits. Okay, so there's that. Let's get back to the chart. Let's get back to the chart. Okay, levels and lines. Um, that's the straddle. So that's kind of where we are. Other numbers of interest, and I think I'll go do the way I do it a little differently. I'll go through them here, and then we'll look at the gamma charts and stuff. And so right around the 63, 65 here, we've got some structural support, kind of where we closed right below it. So that's a level of interest for me. We also have some confluence between yesterday's low of the day, which was around 61, I think, and some options positioning over there. So can consider that an inflection point, or if we go below 55 to 50 round number, bottom of the straddle area, kind of where I would expect to see something should we see some weakness. Up on top, and again, we'll look at the positioning. Over 80, things start to change, and then we begin to get into the orbit of this magnet up here, that large market maker level. Got you, Boomer. I'll check your email. Boomer's got some interesting stuff himself, by the way. Boomer's got a YouTube channel. Feel free to throw your link in. Um, if we get over here, like I said, we get into the orbit of this. However, and you'll see this when we look at the positioning, up above, there's lots of sold calls. And so then we get into the dance of the suppressive flow from the sold calls above versus the the customer long calls. However, let's go here. I gotta go here to show it. Hopefully I can articulate it in a way that's clear for people. Okay. So here we are, 6,400 customer longs. If we get over the 75-80 area, it's thin. Not a lot of market maker participation to slow the move and get pulled up to here. So if then, hypothetically, if we get over here, market makers are hedging in this direction, and then we start coming into this zone, let's say, and then we get selling coming in. As we get here, the gamma, the amount of selling that market makers have to do to balance that out, keeps growing. And so then we get this selling into the move up, but the buying into the move away from it. It with positive gamma above or below you, the hedging goes the opposite direction of the move. Now with negative gamma, with market makers short below us, it doesn't provide that same supportive structure below us. If this was a big long bar, then we'd mean revert bounce, you know, like two magnetic poles with a ball in the middle, reverse poles. So here we can go up and we can get sucked right back into here. So you can get some V kind of action and come right back down into here. Okay. And that's kind of the main thing that I'm seeing. So getting back to here, so here's that 60, 65 area where we closed. There's kind of a parking zone, as Gamma Edge likes to call it. Parking spot right in here. So we can kind of drift right into this zone here, 55, 50. Down 10 points today would not be like a big tragedy. And here, below 50, below the round number, from a gamma point of view locally in the 0 DTE, there's just not a lot. I'm sorry, there's not a lot to support us. Don't torture the data. Once again, gamma edge quote. Don't torture the data. However, I will bring up that this is local 0 DTE, but throughout the whole structure, we're broadly in positive gamma, quote unquote, and I don't like that term. We're not in anything. Yes, market makers are long gamma, broadly speaking, but from my trading point of view, there's pockets of positive gamma, there's pockets of negative gamma, there's pockets of neutral gamma, and the large pockets require whatever hedging response is required by that pocket. So, yes, broadly, the market's going to be supported until it's not. But again, should we somehow end up over here, we got negative gamma down here. We got a lot of we got these long customer long puts down here. So yeah, I just think it's. I'm not a fan of that terminology. Okay, now let's go. I would like to go to depth view because I want to show you. We were talking about, or I was talking about. I don't know what you were, the um the positioning into next week. So here we are today. Market makers are short, so customers are long. 16,000. Okay, I thought it was 18,000. Maybe some of them closed. What people sold 6,400s, you know, yesterday, whatever, selling volatility. But that's still a lot. Now, to we're around here to or here to get moving, we have to kind of go through this market maker short, market maker long. But we have some decent buying, mean reverting stuff here. We have nothing really above us other than this. So that's kind of the move that we could get. But I wanted to get into next week. So into next week, actually, I thought there was more. It looks like more closed out over here. There's 2,000 long calls at 6,400 for the 31st, and not much for the end of the week. While we're in the neighborhood, let's take a peek on what we have. Okay, so not as much as I had remembered. Maybe stuff closed out, but look what we have: 6,500, 6,500. So now these could be the other side of spreads. It could be right tail hedging, but the drift is up for now. That's just kind of what I wanted to take a look at. Anybody want to jump on the stage? You want you want to
Sure.
comment, question, whatever?
Can you hear me, Doc?
Yep, I sure can.
Yeah, I think, I mean, my technical analysis is on the
Right.
kind of the same boat as yours. I mean, I primarily trade the Qs and I can see some weakness. However, yesterday it did look weak for the beginning of the session, and then that rocket came out of nowhere. So I am a little in no man's land, me personally.
Yeah, no man's land is a good way to put it. And I mean, I think whatever one's way of looking at it, I think if a pause that refreshes and puts a little clarity on the structure, whether it's technical, TA structure, candle patterns, or whether it's the gamma structure, whatever, would be nice into the weekend so we can look at things.
You're right.
You know,
I'm not expecting an easy session. I guess I'll say this. I think scalps will be great today, and I think don't be married to a certain direction.
that's a good way to put it.
Yeah.
Now, I want to take a look at VIX again. I didn't take a. Oh, and I emailed Scott Nations Index, and he's agreed to do something or other with me. So stay tuned for news of when we're gonna do it, and on YouTube and on X or whatever it is. Obviously, my subscribers, people that follow him, whoever else, is going to be an open public event, and that'd be interesting. And I'll just briefly, if you guys aren't familiar with him, I'll touch on his stuff while I'm over here in the volatility space. So when I look at volatility, I like to look at a line chart, and just to give it a little context. So here's the VIX, and we've been looking at this. So we're down to basically February levels. And, we know you don't do TA on VIX. TA is a calculation, not a number. However, it's looking kind of low. The VIX one day is a flawed measure. I'm not even going to bother looking at that, but since I'm looking at it anyway, it's giving us a 10. So what's a 10 VIX telling us? About a point 0.3-ish move, 0.35, something like that, which is kind of what we've been getting. So it's not wrong, quote unquote. I like to look at the 9-day VIX, especially now, since we know VIX is a 30-day measure. Um, 9-day VIX just happens to take us to Liberation Day, and that's 14. And when I calculated it before, that ends up being about a 95-ish, less than 100-point move between now and then. And as I said in my little note, is it overpriced? Is it underpriced? Is it Goldilocks priced? And the answer is I don't know. I really don't know. So switching to Scott Nations for and Nations Index is just for just a second. So he calculates his stuff using SPY 30-day, not SPX. As most of you probably know, the CBOE uses a strip of SPX options, calls, and puts, however they weight it, 27 to 30, whatever, 30-day-ish, but it's not 30 days, and they weight it. But sometimes that weighting obscures what's going on at the tails. Getting one global number doesn't really show the picture. And so he's got this measure, for example, and he'll talk about it, I'm sure, more articulately than I can. So this is vol I, which is at the money volatility. And again, at the money vol is pretty low. He's got TDEX, demand for left tail hedges. I remember the good old days in April when people were buying the wings and I was selling it to them. I was selling it to them when people were buying the overpriced wings because the sky was falling. And then, we had a little bit of wing buying on like the occasional headline here in June. And now, if we look, we go see occasional buying of the wings. And then we have SDEX. Again, he'll do it more articulately than I can. We have SDEX, which is the one standard deviation out, kind of standard hedging. And that's in a healthy-ish range, not terribly strong, not terribly weak, maybe a little on the complacent side if I had to interpret it, as a tourist, not as a nationsologist. Just kind of trust your eyes. You can kind of see where it is. And so just kind of trying to put that into context of me saying, watch local vol today. I've been noticing, and this is just kind of, I haven't looked at it systematically. I just kind of been eyeballing it and noticing what's been happening the last few days, maybe last week, is at the open, VIX has tended to pop a little bit. We've tended to pull back, kind of find either a low of the day or a local low for a few hours. And then once that move is over, let me find a day. Once that move is over, whenever I can't, whenever it's over, then we kind of resume. Then the hedging flips the other way, and we kind of start marching back up. It happened. Yes, it's happened most days this week. So I'm saying that to say this. I'm going to be watching to see if we get another one of those VIX pops in the beginning of the day or near the beginning of the day. After 10, 15 minutes, it doesn't always happen right at the open. Then we suddenly get this weakness, and then VIX kind of calms down, or IV, however you want to follow it, fixed strike vol, whatever your way of following volatility is. It's just easier to eyeball, for me, I eyeball VIX, so I eyeball VIX 90, and that's enough of a tell for me. So there's that. Okay, 8:54. I think I'm doing good for time. Oh, okay. So since I've got a couple more minutes here, let's switch gears again. And actually, I'm going to go. Let's take a look at Tesla. I was looking at Tesla before. And actually, I was using Gamma Edge to look at Tesla. So somebody had commented on it, and I looked at Gamma Edge on Substack, and I kind of gave my 2 cents based on what I saw in Gamma Edge. Okay, but let me just pull something up that's going to give me some lines on Tesla. And it's not going to be my stuff. And so I don't have Gamma Edge's trading view loaded, but I should do it. I just been lazy, to tell you the truth. And so here we got some levels and lines, and 300 on the bottom. Not a shocker. And so is this kind of the local low for Tesla? How does it act today? And for that, I take you to Gamma Edge, which I was looking at. And you see I have it loaded. Now, all right, we'll look at this view and then I'll switch gears. What do we see there? We see big gamma, a lot of stuff right at 300 where we are. However, if we select today only, and I like this about them, I like the easy dashboard to just kind of click on picking expirations. We got all this crap here at 300 for today. Let's look at the monthly. Oh, suddenly where'd 300 go? Oh, well, we got this right here at 320, so you kind of got to grind through that. But suddenly the situation changes a little bit. And I just kind of click through the monthlies and get to January. We got this little void here between where we are and maybe getting up to 325, 330. Got to get over that 320. And suddenly the complexion changes a little bit. Let me zoom in here. And we got this here, 305. We still have 300 to the downside. So we're in no man's land here. We're in no man's land here. But after this 300, 290, selling pressure should kind of ease off. Because people were saying 225 downside, whatever they were saying. And
People say
so,
a lot about Tesla.
yeah, it's about everybody's an expert on Tesla, right?
Yeah.
And everybody sees, 500 or 100.
Or 14. Yeah.
Right,
It's one or
right.
the other.
Now, I want to get back to this again and talk about this because, okay, we have not a lot, but enough. 32,000 puts here at 3,000 at 300. expiring today in 6 hours, 7 hours, whatever it is. So pretend that you owned a 300 put expiring in 6 hours. What would you be doing with it? I can tell you what I'd be doing with it. I'd be selling it. I'd be GTFOing it. And so, to whatever extent, if I'm right, people sell this and get out, that could relieve some of the downward pressure on Tesla to the extent that market makers are short to hedge out this local gamma, which is stronger than what's over here, let's say. 32,000 contracts of a $300 stock matters. So now, do they sell it and roll it out? Do they roll to next week, which doesn't really have a lot of open interest yet? Tesla tends to get a lot of weeklies, et cetera, et cetera. I don't know. But in the back of my mind, and of course, Tesla has a weight in the index, and so we got to kind of keep that in mind. So I'm just kind of thinking out loud. We had Intel earnings. Initially it popped and it dropped, and Intel is its own thing right now. It's kind of like I don't know if I'll get canceled for saying it. This is the redheaded stepchild of the semi space right now. But I have no knowledge of anything that anyone else doesn't have. It just seems to me, whether it's Oracle a year or two ago or Cisco or whatever, these monsters of tech with their $1 trillion whatever it is, give them a few years. IBM, remember IBM was a piece of garbage for years. Now suddenly it's double in a year or so. I think, where's my downside on Intel in a year or two? Old man portfolio, not a trade. Where's my downside on Intel versus my upside? Downside what? 20%? Where's it gonna? It's 23, 22, 21. Where's it gonna go? To 15, 17? Where's it going? Upside what? 40, 50, 60? Maybe it'll become a real company again. Maybe with what you call it, with the semiconductor reshoring deals, whatever, acquisitions, hedge fund throwing money in there. Who knows? And again, this is I'm way over my skis right here, but I've been at this for a minute here, and I've got a small position. I'm probably going to be adding. That's all. That's not investment advice. Do whatever you want with it. So anyway, with that, any other final comments before I wrap it up?
Not for me. Thanks for this.
You're welcome. Anybody else? Okay. And I'll probably write about something. I might write about Intel in my weekend note. I do a weekend freebie on Substack, and I'll probably do that. I tend to try to do something that may be a little bit more of general interest for I would call the casual CNBC viewer. And so, along with enough stuff to keep my quanti geek people interested as well. Anyway, okay. Take care, everybody. You're welcome, Kurt. You're welcome.